Okay, on to our next company. It was a steady quarter for Paras Defence. Revenues and profits saw growth while EBITDA declined and margins also contracted. Amit Mahajan is Director, Technical and R&D at the company. He's joining us now to take some questions. Mr. Mahajan, good to have you with us here. Thank you very much. The fourth quarter was a steady one. However, there was some impact which was seen on margins. Could you tell us what put pressure on margins? And last time you were on the channel, you mentioned an order book of 550 odd crores. Could you tell us what did you end the financial year FY23 at in terms of order book?
So firstly, good morning and thank you for having me over. There has been some dip in EBITDA, but that's within the tolerance, I would call. Some impact maybe because of certain projects. We are a project-oriented company, and certain projects might have a higher raw material content, and that can have some effect on EBITDA. But this is also very, very marginal if you look at it. If you look at the PAT figures, they are still improving. So I would like to say that there has been a steady growth, and there has been steady retention of all the growth figures that we've been maintaining.
Okay, all right. Hi, Amit. Good morning. Give us a growth number then. For FY24, for FY23, you've grown by around 20%. I think in the start of the year, you were aspiring for a bigger number, but maybe some kind of delays and the likes. Now, what kind of a number can you guide for to grow in FY24? And also, what kind of a rough margin? So I want three numbers: revenue growth, margin outlook, and current order book.
So I will start with the current order book. Current order book is in excess of 550. We still retain that. With a funnel much higher, more than 2x, which also we are retaining. The order book will start building up in the next quarter or so. The revenue, we should grow much higher than what we grew this year. For the coming year, I would like to mention about 40 to 50% at least is the growth that we're looking at.
Margin? And margin?
Margins we would retain or slightly better.
Okay, slightly better margins. And you said 40 to 50% growth in their revenues is what you're looking at, is it, for FY24?
That's what we're aiming.
Okay.
We have order book to support that.
Sure. Yes, you do. Of course, you have an order book of 550 crores. I get that. Currently drones constitute less than 20% of your order book. But I remember you mentioning last time that there is increased traction in this space. Can you tell us what is the order book like? What's the order visibility? And how are the margins in this segment?
Drone, the good part is we started revenues in the drone segment. And another good part is we got certification for our agri drone. So this has already kick-started some of the business which was in store for us. This should look at a good revenue in this particular financial year. Margins, it all depends. It's a little competitive space, but still because one, our technology is very, very superior than most of the agri drones that we have. And the second is we are making it everything in-house. So making it very, very cost effective and still retaining very good numbers as compared to Paras Defence. So Paras Aerospace will execute far more better margins than Paras Defence also.
So could that be one of the reasons why the blended margins could suffer? I mean, in the near term, 23% is what you've clocked in this time. I think, about 26% actually in Q4. Given that you're saying that, you're looking to sell drones at a competitive price, perhaps penetrate the market further, could that affect your blended margins?
It would affect blended margins the day Paras Aerospace revenues are substantial. Right? Currently, even if they go to 100 crores, it will still blend in and the blending effect will be negligible. At the same time, Paras Defence is doing well and their margins are improving. So it somewhere, nullifies. And there won't be negative impact for sure on the blended margins.
Okay, all right. Out of this total number that you're giving us, exports will be how much, Amit?
Exports, we would be looking at about anything between 10 to 20%.
10 to 20% of the revenues?
Yes.
Okay, all right. And drones in the past, I think you had said by 2025, they'll constitute around 25% of the total revenues.
Yes.
Is that the number you'll stick to?
We are still bullish on that. Yes.
Okay. Is it a possibility that Paras Defence maintains, a 40% sales growth over the next 3 to 4 years? I'm asking because, that is perhaps the expectation that the industry has, given the kind of tailwinds that you're dealing with. And is it also not just, 40% sales growth, but also on the margin front, maybe about 27, 28%? Is that a reasonable estimate as we move along over the next 3 to 4 years?
I do not want to talk about 3 to 4 years because that's a very, very long horizon. But the next couple of years are looking very, very bright. We have that much commitment on our hands, and that commitment is growing as we talk. So next couple of years, you can expect very, very good growth for companies like Paras Defence.
Okay, all the best. Thanks a lot for joining in. That is Paras Defence and the way forward for the business. They're getting a lot of order traction from, spaces like drones, and their order book has also been growing quite a bit.